All right. Welcome, team. Happy Monday. Welcome back. I'm happy to be here with you again, Dan. Last week was a really amazing session that we did on kind of like basic stuff, but really interesting. We got like some really good feedback. So I'm really excited for today. So welcome back, Dan. Nice to have you.
Hello, Fabio. Thank you to be back. And I'm really excited because we showed so much stuff last week and we're going to pick up right where we left off and going to dig deeper and give you even more layers and foundation. Thank you for having me back, Fabio.
Yeah, excited. So if for those who missed last week, just come back to our YouTube channel. I'm going to post the link as well in the comments and let us know if you have any feedback. Just go to our live session, and then if you scroll back here, if you look at the last session with Dan, we did a lot of things on volatility, on how to look at options, and today we're going to continue down that path. But I think before doing that, again, like we open quite strong today. So we have obviously positive news coming from the weekend. We had our indices and futures were like up almost 2% overnight. And of course, if we look at our intraday gamma levels right here, we are now approaching really important levels. We are at the core resistance on QQQ. We had the same on SPX. And of course, you know, like really positive feedback. We breached the core resistance actually on SPX. So clearly, obviously, the market wants some positive news, wants some catalyst for a potential upside. Let's go over the dashboard and let's see how you can kind of like look at the data and why it's important to look at some of the scores that we created. So for those who have followed us, we released our Q score just less than a month ago. So the goal of the Q score is really to provide you with a very quick snapshot of what the market is looking by looking at 4 different factors. So we have our option score, our volatility score, our momentum score, and our seasonality score. The score goes from 1 to 5. The only one that goes from -5 to +5 is our seasonality score, where -5 is bearish seasonality and +5 is bullish seasonality. The other 3 are from 1 to 5, where 1 is obviously a bearish number. You can see it in red, and 5 is a bullish number. But what are these scores trying to tell us? So here you can quickly over it, and you can see that basically looking at SPX, we're still in a negative gamma environment. So our gamma condition is still negative, and our basic option score is still kind of like bearish. So the positioning of the market is still kind of like in a bearish mode. Let's see what happens at the end of the day today. When we look at volatility, we are neutral. So the market is really uncertain on what's going to happen to the index. And now the momentum is kind of neutral as well. So it was very, very negative last week. And now we are at 2, so neutral momentum. But our seasonality has gone positive. So let's look at what that means, right? So if we scroll down, we're going to see the different scores. So you can quickly see basically what happens when, for example, the option score went from really positive to really negative in a matter of like 2-3 days. Clearly, we saw the start of a really important downtrend right here. Now the option score is kind of moving towards the positive side. We're still kind of like in a bearish option score, but we are kind of moving from a 0 to kind of like now we're at 1, but we're going to see how you can look at that also on the other asset. If we look at our seasonality score, let's look at what happens when our seasonality moved from really positive around 3 here to kind of really negative, and then suddenly we saw the start of the downtrend, and now we are kind of now moving back towards kind of like a positive seasonality. So looking at what this could mean for the market could be very interesting. And then, of course, we have our momentum score. So we've seen what happens when the momentum went really negative. So we saw the start of this really big move over the past few weeks. Now the momentum is still kind of like neutral here, but we are seeing kind of like a slight change in the momentum score right there. And the same thing we do it with volatility. Why is volatility? Because when the market is kind of like in an upside move, volatility tends to stabilize. When the market is on a very strong downside move, you see how the volatility kind of like change from really really neutral to kind of like really negative, really high volatility. So now monitoring the volatility is going to be very important. We talked about volatility last week. When is a good time to buy option? When is a good time to sell option? Today we're also going to look at volatility again with Dan. But basically, like, it's important to look at these scores, and then let's look at, for example, let's look at an asset. So let's look at Tesla. So Tesla was up around 10%, almost 10% today. And we can do the same exact analysis, right? So we now, the first thing we note is that we are back in positive gamma on Tesla. We can look at our matrix and we can see how the gamma has changed from Friday close. So clearly we have some positive signs here on Tesla. We can also look at a different expiration, look at the net JAX chart. But what we want to also monitor is really our scores. So we see that basically we are in a neutral option score. We were really bearish last week. We were at 0, I believe. We're still in a very high volatile environment on Tesla, and we're now neutral in momentum. And the seasonality is still like, we still don't know what the seasonality could bring. So we can come here and monitor the different scores. So we have our option score here that was really negative last week, and now we are slightly getting better. The score is like increasing right here. And then basically the seasonality also like was really negative, was -5, and now we are at 0. But look at how the movement over last week changed from a -5 seasonality to a 0 seasonality, and that resulted in kind of like this move right there as well. So seasonality can be very important. And then, of course, the momentum still negative, but we are seeing a change in momentum. So let's monitor how that can evolve. And of course, the volatility was very, very high last week, and now we are kind of still kind of high. Let's see what happens there. I don't know, Dan, if you have anything to add here, and then we can go into more actionable insights.
No, that's all. Perfectly subsumized, and I think we can really jump onto that. So if you have something more to show, Fabio, otherwise maybe we take a look at Tesla and the 5-day swing model, how even without understanding everything around, you could just look at the model and see suddenly there's a shift. You don't need to read the skew. It's good if you can do. You don't need to read the smile, which will give you even more, or all the metrics. So you just follow the swing model. You could have been on the upside on the right time, maybe lagging one day, but this is not bad. Like, you want to pick up the whole thing. You don't want to jump too early. And we will show you some things. I don't know, Fabio, maybe a nice thing, maybe we can show how we go back in time here. I have sometimes getting right. Exactly. Here you can go here back in time, and even on the swing model, even if you don't do it there, you can just go on the swing model and take a look at it. So maybe if we go back a couple of days, we would see the swing model had some other something else to tell us. So let's go a bit lower, and you see an upper band. That's the upper band. You are in a trade there. There are two things. If you are in a trade which would benefit from Tesla staying below the upper band, the moment when you go to a lower band, you should reassess the whole bias of your trade. If you have a skew trade, like I have a lot of trades, you can think, is your skew trade safe? What do I mean with a skew trade? You go on non-directional trades. We will look at these ones too. You could maybe pick a bit aside and profit from both ends, but make things more easier when we talk about bias. You are in the call dominated side and you sold some call, as we showed you on the break even, and suddenly we go to a positive model like Fabio showed you, and you maybe should reassess, am I safe here today? Do I need to change something? So if you just follow the models, and that's why MenthorQ developed the model, it takes so much data and factors them in, so you don't need to look at everything and understand everything. You can just follow that, and you are, most of the times, you are on the right side, and the winning is in the numbers. You will see on the swing model a lot of time 100%, but This is for some certain days, but in the end, you can always sit down and calculate and see, okay, if I have a 70% chance of winning most of my trades, how much will I make? If I make, let's say, $100, if I lose, on the other hand, 200, so you can calculate that. So you will have $1,400 for 7 times if you have 10 trades, just statistics speaking, and then you can calculate how much will you lose. So you were losing 200 and you would lose 600 when the other 3 times you would pay. So in the numbers, you would win. So that's why Fabio showed so many results of the swing model on earnings, on all the stocks and everything. So you get a grip and a feeling for it. And our sessions here together are not only to give you actionable insights. We want to leave that to you, but how to use that. And the easiest access for people who just started trading options, who just don't have a lot of time, who just want things to be easy and to follow something without feeling the market is too hasty and too difficult to understand, because MenthorQ offers so much data, so easily to understand, but sometimes it can be a lot. And I do understand that, because MenthorQ has made a lot of difficult and professional data easy. This doesn't mean that it's not overwhelming. And we will show you in the next couple of weeks how you can harvest all that data. But if you want to start super easily, do that. What everyone would do, look at the easiest chart, and this is the 5 for 20-day swing model. And if you are in doubt, ask someone who doesn't look at the market. If you have kids, ask your kids and say, what's going on there? What is happening? So there is a downtrend, but a green always means you can go. So this is the psychological effect, and it's really important to monitor the model. For all the trades I have, I do monitor especially the 5-day model, so to be prepared, and has saved me a lot of troubles, I can tell you.
Yeah, and also like it becomes like for example, when you mentioned that we went from an upper band 2 days ago to a lower band, right? It can also be a nice alert signaling that something could change, and therefore you could have those levels as maybe either profit targets or stop loss. So if the market goes against you, you still have levels that you can play with in case things go sideways and can move against the direction.
Absolutely. So, and we have this risk trigger, and we've talked about this, but not as much as the lower band, which is basically the direction you take or the side you want to skew. But the risk trigger is something will happen there. So maybe Fabio will show this here. Yes, something is happening here. What does that mean? Maybe this level will come back in a couple of days. We've seen that a lot of times, that the level comes back. So maybe it's broken one day, but it can still play a role. Otherwise, the model moves up, and then you know you are in a clear trend if the risk trigger moves a lot. But on the other hand, as Fabio told you, if you can have this as a stop loss or the risk trigger, I use the risk trigger as an earlier alert that something is going on. So let's say I would be in a Tesla trade here. I would have the break even of 224. Okay, I would adjust it today if I was trading live because Tesla is going up, adjust it a bit. Also look at other metrics MenthorQ offers, but let's say at the risk trigger, yes, it's a good profit-taking target too, or I would be very, very cautious that something happens. So if we break that properly there, because probably the core resistance is broken, you can close your trades, which you set up easily, taking off 50 or even more % within a couple of days as a profit, which is very nice. And the other thing which you can do, if the trade continues, and if you're maybe in a naked call or sold some naked puts, then you can let winners run. But good to take profits early. Maybe you can roll up or roll down, depending on which side you are. So getting more credit or take some winners off. So it's really nice, and that's why it's called a swing model. It takes more time than the daily actionable trades, which day traders do, which is a very nice thing you can do, but you need more time. And this is like, how much time do you need? Basically, depends how much trades you have. But if you stick to the 2% thumb rule, for each trade, not more from your account. And let's say you have 10 or 20 or 30 trades on, maybe it takes you an hour to check all that stuff daily. Or if you don't have time at all, take the 20-day swing model, which gives you more room. So I can tell you, you can fix a portfolio for a month and look at it only once a week. Maybe we will build something like that just as examples, not as trading advice, but as examples, so you can see with little effort, MenthorQ delivers you something very easy, because not everyone has the time to day trade or has the capacity or other reasons and prevent you from doing so. So that's a nice thing. And options, as we saw, are at least three-dimensional. We have volatility, we have time, we have price. So with these kinds of trades, you at least have two things on your side and some extra bonuses. You have volatility, which we will talk again today on your side. If you set up a credit trade or you switch it around, have a debit, volatility inflates. And you have time on your side, at least when you sell credits. And on the other hand, which is the biggest bonus is that you have the model which factors in all these important GEX levels, and you don't need to check the DEX charts or other things, which I do. You can do that to get even more an insight, but we will do this on the long run, more in depth, how you can even build better profit-taking targets. But if you are like I am in many days, I don't want to spend too much time, because time is money. If I spend, let's say I have a Bank of America here, which was beaten down. I just looked at it now, and that would be a nice trade to have taken today, maybe from Friday on. I was seeing it hovering around the HVL level. We will talk about that too. And what I do is, if I see stock not only breaching the call resistance, but the HVL level, the high volatility level, I know is the regime change. And if it follows through, this is a nice trade you can just take and target the call resistance. So easy. And this is something you can do either with the levels or on a longer scale with a model. So this is something very, very nice. Okay,
Yeah,
Fabio, you
also,
want to add something?
Yeah, and also, Dan, I think what the model is trying to do for those who are not familiar with the model, we have a lot of documentation on the website and we have a lot of back testing. Basically, the model is trying not only to predict the levels where the price should be above or below. So it's really like a 5-day band or a 20-day band, but it also tries to predict the direction. So that's why the risk trigger becomes really important, because if we are good at predicting that we are now shifting, in this case of looking at Tesla, and we are now in a bullish bias and we have these 273 levels, then that 273 levels could actually become an inflection point and the start of maybe a new trend, right? Because if we are able to identify the direction with a good success rate, which here we see at 76, but sometimes is even higher. We've seen like 100% success rate in some cases. Then, of course, the risk trigger becomes an important inflection point. So again, you can use it as a take profit target, as like a stop loss target. There's different ways you can use it, but we have a lot of documentation on the website as well.
Yeah, that's true. And maybe on a further scale, when we start building our stuff, we will also look at the swing levels, which we hadn't talked much here. We'll do that some other time. So just for you to know, if you want to follow up some things and you want to just experiment, you see the add command on the right side up there. So you can add stuff which is not there every time. So like you have the swing levels here, you have blind spots, you have the main chart, a lot of stuff which I use, QODT. So this is very nice. You have the classical levels for Tesla, but Fabio will show you now, but you have the swing levels, which if you want to set up a trade, these are levels which Fabio described them as sticky ones, and I find it very good. These are levels where the price, there has been some actions here. You see what is happening here? You see some level here from the 21st, from Friday. So something is going on there. So if you had this level on, this could have been, if you were in a bullish trade, this could have been a basically a target for today. Or if you say, okay, I feel comfortable that we will stay below this level. Like we had some special levels today. Everyone was talking 75, 50 today, where the SPX is going up and down. This would be something, if you want to day trade that, or you want to set up another trade, these are great levels which you can use for everything. And they give you an extra layer next to the GEX levels. So this is something very awesome. So this is something I would factor in when setting up a trade. But if we circle back, keep things easy, to keep things basic. So we're going to look at volatility today, but I would basically use this model to get a grip. Where are we going? Also use the 20-day model to have a longer distant trade, maybe to set it up to, let's say, avoid the gamma risk. We'll talk about that too. Like the closer we get, the faster options lose time value, but also they are more affected by the gamma risk. But I think we will deep dive into that another time, why sometimes it's good to sell a bit further out, and MenthorQ gives you all the tools you need for that. So I think, Fabio, maybe we will, after this introduction, we can swing a bit from talking this from the swing vehicle, we can swing back to volatility again and take again a look what we talked about last time. I think you can see my screen now, and I have the gamma levels here, and this is basically here in the MenthorQ main screen. Basically here, if you go down to the levels, this is where we were before. Here, the indices and stocks, this is the dashboard, but this is the volatility basically area. And if you click on that, you will see the things we talked about last time. So let's take 2 or 3 minutes just to, for all those who weren't there, for all of those who were there, just to get a fast grip about the fundamentals again. Volatility is one of the important factors, and won't start talking about all the details Fabio gave you last time. You can revisit the video, but 2 things stuck with it. If you are in a high volatility regime, you can see this. If you have a high IV rank, this is explained what it means here. This means this could be a good area to sell credit. Why is that? Because normally, like I will try to draw it, we have a bell curve. We go to extremes. And this happens too with volatility. If volatility goes up, there's a reason for it, but normally it will go back to its historical, basically, metrics. If volatility score it's at 100, right now implied volatility is at 100 and the average is like 50, then you want to have volatility on your side because it can deflate. What does that mean? Because volatility affects the price of an option. Let's forget about theta decay, so time burn, and let's forget about price action and everything. This means if everything else stays the same, if volatility changes, price of the option changes. So if the prices are high, like you were seeing a lot of high prices for all the indices and everything last week because we were in a kind of very volatile regime before the quadruple basically and all the options last Friday ended. So we had this very volatile regime. So this means you want to sell that, and you basically are in a high volatile regime. There's a reason for it. You should always check what is the reason. Maybe you have earnings. Maybe you don't want to take up a trade, or this is the reason to take up a trade. But normally, if we are in a high volatile regime, volatility will go down at some point, not collapse like we have in earnings. We'll talk about this again at some point, but it should go down to its historic metrics. On the other hand, if you reverse that, if you have a low volatile environment, so implied volatility is low, but historical volatility is higher than the implied volatility, where does it help us? It helps us that the price of volatility will expand. So the price of the option and everything stays the same. the strike price. Let's say we have an option that always stays at $100, and we don't, time is frozen. If volatility expands like a balloon, it goes up. This means we will just profit from that. So what do? We take some money in the hand and put up a debit spread or pay a debit. Let's say we just buy a call for $100, but if volatility expands, maybe it's worth $110. So that's why you should always check before setting up a trade, what do I have on my side? We'll talk about theta burn or time decay another time, and you can combine these things. And this is the interesting thing with options, but that's why it's also difficult. You have to combine these things and think of all these metrics, and these metrics are expressed in Greeks. So today we're talking about vega, which is basically the volatility, the name for volatility. So what do I do if I want to set up a trade? And we're going to keep things easy here. We talked about maybe selling a credit. Why credit? Because normally when you sell a credit, you will sell it also with a target time decay, time burn. So every day the option, the trade is open and the short strike is not hit, or the option is not basically called, basically, let's say you have a put spread and your put spread, the short strike is not hit. Every day that passes, you make money. If you look into your broker and look at the trades you have taken, you should see a little minus and you should see how much the option loses time value every day. But we're not want to talk about theta too much today. We're going to do this in depth with live trades, trade ideas and setups. So how you could set up things. Another time. Today, we just want to talk about volatility and keep things easy and how you can use MenthorQ to get your next trade. So one of the easiest thing is use the IV rank scanner here. And this thing changes daily, just for your discretion. So what is the first thing I would do? Yes, I do like to trade ETFs, but not all of them, and not all of them are so liquid. And yes, there's a lot of money in them, but look at this. Like you have here a Hong Kong ETF. Yeah, it's not that big. You have this MSC, but I would focus with most of my trades. So this is very important. Focus on liquidity, because the bid and ask spread normally is between 5 and 10%. I'm not talking about the fees you pay. Sometimes you don't pay fees at all, but you will pay a bid and ask spread just to open that. Why is that? On the other side of an option, which is a contract, someone has to stand, and basically you have to find a partner to open a contract, to sell a contract to him or get a contract sold. So let's say if we wanted to just sell here some puts because we believe United Airlines holding is going to go up. Let's keep it easy. We think it will stay below the puts. It will stay below the put support. We will look at the 5-day swing model later and see what the 5-day swing model tells us. We see this with 25 billion, roughly. This is okay. It should have some good break evens. And what is interesting for us here? Two things. Basically, this is something you know. It's also not bad to pick something you know, and don't look at this thing objectively. Don't look at these things like this is something I believe in. No, just stick to the data. But we have a big company here. We have a spot price which is a bit higher than the put supports. It's a bit lower than the call resistance. Maybe it will stay in range. Maybe it will break through with that. But what is interesting to us today? Okay, we could look at this thing here, but we will do that another time, which is, what is that? The put and call open interest, to give you more of a bias. But what is interesting, we have a 56% historical volatility for the 30 days. And this is a bit slightly higher. And let's go here for a second. I will set up just, we will sell the forward put, ULA, which is very easy. Let's pick up something close to the 20-day swing model. Where were we? 74, 75. Okay. This is not so nice if you don't have so much liquidity here. So we would pick something like that. Don't look at the margin. Don't look at the awesome credit you might be getting here. This is not bad. It's one to 4, the risk. But what is interesting here? We're a bit lower than the put support, but what do I want to show you? You had 66, and if we go, and this is the magic here, let's say we go to 50, 56 here, you will see we get faster and faster green. So this means if time passes faster and volatility drops, this means you will get, there's a bigger chance for you to get, basically to get faster, to make faster, let's say 10, 20, 30, 50% of the target you have. So this is a nice way of doing it. So today, it's an awesome trade. If you had taken it on Friday, today maybe we're out of range. So what happened here? We broke 2 things today, and we can circle back to that. So things you should look at. We have the put support right where the high vol level is, which is beautiful if you know that. You have your own positive environment. You have the 1-day minimum and the 1-day max. So most probably this, if you were in this trade, this would be basically a great price tag or a point where I would take off my trades. Like if we are here, take off the trades, you have made enough money with it. The thing is, we pass the high vol level. Speaking, basically, if we pass the high vol level, the regime changes. Plus, and this is the nice thing here, if we pass the high vol level, my targets normally is the call resistance or something above, or the 1-day max, which moves. But I will look at it. If we get close to it, I might take some trades off. But the nice thing is here, these are levels which you should take into consideration, and this is here the bonus. But we are talking today, and this is the interesting thing. If you put this trade on for a longer time period and you don't have a actionable day like today where everything is going up, like everything is floating up, like everything was going down before. So what do you want to set up? If you sell credit, you want to profit from basically a slight collapse in volatility and the swing back to the normal levels. So this is something you could have easily picked. And let's say if we didn't have this run up today, without the price moving, still make money. So in the end, and this is something I want to stick with you. Keep things simple. The Greeks, they're not easy, but keep the important Greeks on your side. And Vega, you can easily trade it like that. So this is something you can set up. Okay, Fabio, maybe we take a look at if there are any questions or something. No, I don't see any questions.
Yeah, no questions so far. Yeah, let us know, guys, if you have any question for them or any question on what we discussed so far.
Yes. So let's go to Netflix here. Should also run up today. You have all these important levels here with a positive regime. And here, the difference is not that big. So another thing I wanna put into your heads, stick to the liquid names. You don't need to put up 10 trades a day. You should have good trades, and if you see an angle and with time, you will feel more secure. You will feel better, and if you keep it easy, just trade the 5 or 20-day swing model. And if you feel you have an edge there at some point, yes, you will lose 1 or 2 trades, but we will look at what you do with losers. Some trades you can't save, but a lot of trades you can do a lot of stuff. But we will look at this down the road. But you don't need to take all the trades. Like this could have been a trade I would have taken, but maybe not only for the volatility regime, but maybe for some other reasons. So let's circle back here and switch sides. So let's take a look at low IV rank. So what do we see here? Where is a low IV rank? Let's see if we find something we know. Yes, I've traded this kind of stuff. So there are a lot of interesting companies, but the smaller the market cap of a company is, the more volatile and more difficult it is to get into a trade, and the harder it is to get out. Remember, we had Broadcom last week. I talked about that. So this dropped. This dropped, and we said, yes, at some point it should go up a bit, but we need to give it time. We need to give it time. So what is happening here? I have implied volatility is at 44 roughly, and historical volatility is 78. So I would have sold a debit here most probably, because we have a good chance of this trade going up. So yes, you can take a bias, maybe make a bullish trade of it if you take the spot price and see, basically there's a lot of room to run to the call resistance. You have some room to the put support, and maybe you put up some bull put spread if you like that. You are sure about the gamma environment. And when would I have set up this kind of trade? We're at 91.6 roughly. I would have waited for the high vol level to be breached and something here, or maybe the call ODT. Always monitor that. There are two call resistance levels, one for every day and one on a longer scale. We will look at the metrics, how you can maybe find out trade targets for yourself. There will be a nice place maybe to get into the trade and put a price tag on and just let the trade roll. So either you have theta on your side, if it's a credit, and if it's a debit, you would have just maybe bought a call and sold a call, which is a bit higher. Why that? Because we believe that the stock will go up, plus volatility might pick up from here. So this is something which is very nice to take a look at. So also we have here the IV rank, which is basically you can also, and a lot of people don't use that, but I like that. You don't need to do it all the times, but you can see here a nice metric. So a lot of people traded Siri for some time. They made some money. A lot of people also lost money. This is the stock market or the options market. Some people lose, some others don't. So try to be a bit on the right side with the data. Try to be the casino. Think like a casino, and then you might win, because winning is it's a numbers game. It's nothing more. So every time you put a trade on, don't forget that anything can happen. It's not about being right or wrong. Anything can happen. You just should have a security on the long run in your numbers. And if you don't have a trading system, then just use what MenthorQ provides you and scale out of it with the things we're going to show you. So this could have been something you could have said, okay, implied volatility is here and historical volatility is lower. So yes, is it something I want to take? Maybe. Then you take a look at the IV rank and you check some other things, or maybe not. So that's why I went to the AVGO. Broadcom is something, it's a big company, just had earnings, and we know after earnings, volatility crushes and it will go up. So this is one part of the puzzle. And don't just take trades. And this is another thing I want to say about volatility before we go to other metrics here. Don't take just trades because you see a nice volatility gap. Volatility just helps you to get acquaintance with some things and maybe take a step to something, but it's just one factor of the whole thing. And it really depends what you're gonna trade. We would take a look at some very simple things, for example, put selling and maybe what strangles, which is also very easy to understand, but volatility can play an important role. So another thing I want to point you to is, so we will look at these things very fast and then take a look at some trades and how trades can be set up. And then before we end here, we're gonna take a fast look at the gamma levels and maybe how you can get ideas to set up trades and combine them with volatility. So we had the high IV rank, so highest implied volatility. This could be the window to go if you want to sell credit, because yes, everything is elevated. But I want to show you this. You should be aware that if the implied volatility is like super, super high, something is going on. The market, there's no such thing like a free lunch. For example, here, people who follow some of my trades, they will have seen that I did some nice trades here on Warner Brothers, but this was an earnings trade where I sold volatility and I wanted the crush. I had some calendar on for that and closed very fast at the opening. But this is something where you maybe get an idea of something you could maybe put up in trade where you will profit from volatility decline, but you also should make you very, very cautious if things are go up. So what is the first thing you look at? And that's why I really like that here, because you don't only get the implied volatility like you have in many sites where you have like a high IV rank and very high implied volatility numbers, but you also get some other factors here. And this page is something like, I will find a trade maybe every 2 weeks here or once a week. Why is that? Because these are things here which I really like. Most of the time, these are small companies. They are pushed up, they fall down. So you can be into that. This is really, it's a lot of adrenaline. And if you're on the right side, you also look at dark pool levels and you look at other things which like a lot of option flows and everything. Yes, you can find the next trade, which will make you like, if you have some long hauls, 400% in a day, but normally it's very, very risky and you want to sleep well at night. And if you want to do something actionable, do day trade, there are a lot of great levels at MenthorQ. You don't need to do something like that. So there are a lot of companies we know here. So one of the first thing I do is I don't look at the scores. I will just basically rank them by market cap. Why is that? The bigger the market cap, normally we don't mingle with stocks which are just like hyped stocks where some liquidity can appear. This is something here which is like an indicator which could be a good idea. So if you're a fan of Nokia like 20 years ago and say, wow, I just remember I had a Nokia in the 90s or 2000s. My first phone was a Nokia. What an awesome phone. Could just send SMS and limited SMS. It was like Twitter, just old fashioned Twitter. And you look at this here and say, wow, elevated, like astonishing. Let's make some money here. So you see the spot price here. We're above the call resistance. Is this a good trade? If you were here and it was breaking out to there, maybe yes, but basically you don't know what will happen here. It's so small, even if it says 29 billions, the liquidity is not there, I would stay away. So all these trades can give you an idea, but most probably out for the regular trades, I wouldn't do it. So that's why let's circle back here to volatility and see what we can take, what ideas we can get here. So we looked at this high volatility. So let's take a look at highest historical volatility. So what do we see here? We see the implied volatility and we see historical volatility. And right now, there's super microcomputers, which a lot of people talked about, HIMS, which a lot of people, you will see a lot of Big Bear, like Baby Palantir and all these kind of things. Riley, this was one of my signature trades I did in the last couple of years, making good things with it because it nearly went bankrupt. But these are trades which I wouldn't take every day. So let's stick here. What do we see here? So we see here Supermicron computers, which has an implied volatility of 87 right now, and historical volatility is much, much higher, which means if you want to sell things here, let's say you say, okay, I believe this will go up or this will go down. It doesn't matter. Maybe price will save you. But if you factor in the aspect of volatility, then Would I sell something here? No, I wouldn't, because historical volatility is much, much higher. This means, and the IV rank shows you this, this means normally if you sell something, volatility will work against you. This is like if the data is right. We never know that, but in hindsight, we know that, but this is basically something to stick at. So here, most probably, if you have a bias, then take the bias and do it for a debit, because you would have volatility on your side. So let's take another look at Big Bear here. The same. It's not that crass as it is with super microcomputers, but still, this is a good indicator that we're not on the safe side. Lunar, a lot of people are mingling with this little stock here, which is even getting closer here. So this is better, but I don't know. I wouldn't do it. A lot of people, they went for this one here, which is like super tiny, but okay, for everyone can do what they believe at. But this is like a tiny stock, like plays in the penny stock range. I wouldn't do it, but it's a good example. What would we do here? If we did something, we would sell for a credit. So these are very simple truths, things you can just factor in when you take a trade. So let's swing back. Let's swing back to our gamma levels. So let's keep things easy. So how would we set up a trade? We don't have so much time, but now as we establish fundamentals, next time we will do something about theta, and then you will be ready just to set up anything you believe in. So let's pretend it's Friday evening and the market's closed, and these are this is the latest data. So you have the whole weekend to prepare, and you started here. Go back again. Sorry, I was a bit fast. Yes, you could go to the put, support, call, resistance. But if you don't know what Monday brings, you're not good at reading skew. You have never read a smile curve. The whole market makes you anxious. It goes up, it goes down, but you still want to trade. You want to set up a trade. Yes, you can go to pick up your favorite stocks, go to the 5 or 20-day swing model, set something up. Maybe go a bit back in time to see, is there a change or isn't there a change? If you want to do that, that's great. Gives you a bigger picture. If not, just take the levels, set a trade up at the break-even point. We will do this right at the end, so you just have seen it again. But if you are on, it's the weekend and you want to do an easy trade and want to factor in volatility, this is the point. It's not because it has the ball inside. No, basically this is just the regime change. So why is this interesting? So if we have, let's take Visa, where is the level? The level is at 335. We really are so close at this, so close to the spot level. So what happened here? We just breached it. What does that mean? We changed from negative to positive, which Fabio explained in a lot of depth last time, so I don't need to explain that. Please rewatch the video, but this would be a nice trade to think of. Yeah, I want to go on a bias. Most probably, if we are above, this could be something where I'll sell some credit. So we could set up a bull put spread here, right around basically the put support. If you want to be on the safe side, the 1 day minimum is this. So even if it's 1 day minimum, you don't want to be surprised on that day. And if you want to be more accurate, you can use the 5-day swing model. So what else do we see here? And that's why I want to, we have a lot of big names here. So what is the next thing to do? And what did we talk about nearly for an hour today? We take a look at the implied volatility, and we take a look at the IV rank. So implied volatility 24. Don't be confused. This is not the general metrics. This is what the implied volatility for 30 days is. So historic volatility, what must it be if the IV rank is so high? It must be lower. So what does this tell us? We are going to sell a credit. We're not going to do a debit, because with such a high IV rank, we don't want Vega working against us. Let's go to Intuit. Again, here we have a stock. The high vol level is at 605. The spot price is 604. So if this is breached, what kind of trade would we like to take? Again, if we look at the IV rank, again, this is again. Oh, sorry. Here we look at the IV rank. It's low. What does that mean? We are below 50, and this is the rule of thumb. If we're below 50, consider a debit. If we are above 50, consider a credit. This is just a rule of thumb. Check out the other things. We would go for a debit. So we could basically buy a call and sell a call. So have a debit spread. Why is that? Because yes, stocks tend to move, but if you don't day trade, if you want to if you have a trade, let's say on for 5 days, 20 days, or longer days on, and you do a debit, then you don't have gamma and theta working that hard against you. Theta is something which happens every day, yes, but volatility can unhinge that a bit. So if you have the right move and volatility works in your side, you can take off the factor that the time works against you a bit more. But that's why a lot of people prefer credits, because you also have time on your side and you don't need to worry about them. But still, if you are like excited that this stock broke just today the high vol level, and you said, okay, I'm going to sell a credit, and don't do it for a day trade, but do it for 20 days or something like that, and think about volatility, and volatility should pick up. And if the trade stays there in range, doesn't move that much, then you have a problem, because you see here the put support is 490, 700. We're close to call resistance here. So if we stay in that range and you haven't set the trade up properly, then volatility will work against you and theta will work against you. So that's the thing. Think about that, factor these things in, and set up a trade. So let's keep things simple. Let's finish with a nice example. Like we had Visa here. This is a high IV rank. How would we build ourselves a trade? We have Visa here. If we just stay in this here, let's say we have this high IV rank. We check if there are earnings or other stuff, but let's say we want to do close to the 20-day swing model here, and we're going to sell. What would we take here? 325. So no problem here. Volume, open interest. It's okay. Not that bad. So we get a nice credit, and this is the margin. Okay, this is what your broker, this is the max loss. What is our break even? 5.8. The nice thing is, this is the 1-day minimum. We stay in range a lot, which is okay. So nothing happens here, and now comes in the magic, everything we talked about. We had Visa here, 24. I think its implied volatility is around 18% or something. What happened? We have a price tag. We just go up a bit or stay here in range. After a couple of days, we're going to reach nearly 50% or even more as a price tag. And this is what I do. I set some profit-taking targets when I set up my trades, like with bracket orders, which means I know exactly when I will exit. I know exactly when I will close 1/3 of my trades, half of the trades, and maybe leave some runners. I know where I see my max loss, or I know where I have set my alarm in order to basically maybe adjust this trade. So we had this trade on. We're going to go back and see how we can manage this trade. So, excuse me, this is the wrong one. Going to open Visa right now. You just push this button. Volatility is high. Again, you saw that here. So Fabio showed you all this. Seasonality is neutral, which is not that bad. My conditions are positive. A fast look here, everything doesn't look red. So if we are on a bullish bias, it's also okay. So 20 days. So yes, this is a bit lower. We could have gone there, maybe to risk a bit less to do that. But if we think from day to day, you see here, we're very close to that, what I built. You see here, where's the break even? 323, 21. We're a bit lower than the 5-day swing model. So we are really, really good setup. So basically, we have a nice trade on for 5 days or a couple of days longer. And another thumb of rule, if you want to have a trade on, and we will look at that when we set up trades, let's say I normally trade 45 days, 30 days. My target is like half of the time I'm taking off the trades because gamma risk kicks in, which means things become more volatile. Smaller moves in price might swing against you or they are good for you. But basically, I try to avoid to be in this kind of regime. So basically, I like things calm. I like things to close automatically. Don't care that much about these trades. And if you want to feel safe and you want to sleep well at night, basically a good thing would be maybe to just buy some protection here. So this could be something to think about. Maybe have another put here, which definitely lowers your credit. Your margin is lower, and then you have to start thinking, does this still make sense? But in the end, this is something you want to think about. Okay, today we ran up a bit. It's a big move for a stock like Visa, but in the end, a debit or a credit spread always gives you, for not that volatile stock, a better adjustment and risk, especially if you're new to options. But we will talk about non-directional naked option, which is something totally different, where you sell two options and you want to think stay in range. But I think this is something for a more advanced course. I've talked about strangles and straddles and everything, but we have understood the factors of Vega. We have understood the factors of time burn. We have seen how without any tools, this is something I will show you next time, you can, if things stay the same, find out what the price of the option will be in 2 days, 8 days, 20 days, and you will be amazed. And then you will start thinking of, we should maybe deep dive into calendars. You can read things from the options chain. So in the end, for setting up trades, you just need MenthorQ and the options train. And this is something, if you can read these two things, then you're good to go and you can build easy trades, complex trades, and are ready for all kind of regimes. So I think we covered a lot of things today, and let's circle back to the studio and see if there are some questions. I don't see any questions, Fabio. So
No question, Dan. I wanted to just point out just the chart on Tesla, and while we were talking, just look at the reaction on kind of at this risk trigger level right here that we had before. So very nice how this becomes kind of like a reaction area. So those levels are very powerful. So I think it's worth like looking at them. And I think, Dan, I want to share some resources for everyone to use. So first, you can create an account for free. So you can join us for free, and you'll get access to all our academy, free academy, and our newsletter that we send every day. But basically, also you can access our guides. So to learn more about basically what we do, we also have a lot of guides here. So you can come under products. You have our swing models right here, where you can learn more about it. And if you go under quant strategies, we did a lot of back testing of the models, like the last earnings season, and also last year. And then, of course, follow all our live sessions. So this week we're going to have live trading with Anne-Marie Bain from Top Step. We're going to have a session with Doc tomorrow, and we're also going to be back with Ryan early next week on volatility. So there's going to be a lot of like really interesting things, guys. And yeah, stay tuned. We're going to be live very, very often over the next few weeks and months. And together with Dan, we're going to have more sessions as well.
Thank you so much, Fabio. And for everyone, I hope you enjoyed it. And if you have questions, please send them to Fabio or me in the chat, or tag me in the Discord. And stay tuned. I'm going to post more trades. Been a bit laying low because with all the volatility, we have a lot of newbies there and we don't want to put them on the wrong side. So stay tuned and we're going to get you settled up. And yeah, hope you enjoyed it. And there are questions, just shoot it.
Thank you.
Thank you so much.
Have a great evening. Bye-bye.
You too. Bye.